Everyone has this notion when growing up that debt is a terrible thing, that debt is sort of bad. And in real estate, if you do it well, it's actually quite advantageous. Hey guys, so buying property, investing in property with finance, aka leveraged, or buying a property as an investment with cash. In today's video, we're going to be talking about the benefits of what we call good debt. Everyone has this notion when growing up that debt is a terrible thing, that debt is sort of bad. And in real estate, if you do it well, it's actually quite advantageous, but it's important that you know what you do and how you do it. So I'm going to give you guys a quick breakdown of what a investment looks like in Spain with 500,000 euros. One scenario, which is cash purchase, no mortgage, and the other one, which is leveraged. So for this example, let's go with a 500,000 euro property. Now in Spain, where we're located, there's around 10% closing cost, 10% purchase cost, depends on what you buy, right? Which is around 50,000 euros, which means that your total investment, if you buy a property in Spain, is around the 550,000 euros. Now let's look at both options. There we go. So total investment is 550,000 euros with the purchase cost included. Let's assume the property is fully furnished and doesn't need a thing. And now let's talk about, this property being an Airbnb rental investment, not necessarily a long-term, but the long-term would apply exactly the same principle. But for this example, we're going to take a rental rate of 250 euros per night. Let's just assume this is in a prime location somewhere on the coast of Spain with an average 50% occupancy, which is quite conservative. A property of 500,000 euros will give you around 48,000 euros a year in rental income. So traditionally speaking, in a cash purchase, you'd have around 8.7% return on investment based on a 550,000 global purchase or global investment. Now let's look what happens when we start talking about leveraging the bank and leveraging finance. This is what we call good debt. In this case, we'd be looking at buying a property 500,000 euros, but we'd be mortgaging around 70%. 70% means the bank will lend you 350,000 euros of the purchase price, right? And just in very easy terms, we're based in Spain. So Spanish banks are currently offering mortgages at a 30-year term, actually 25 to 30-year term, depending on your age. If you're in your 30s, expect 30-year. If you're in your 40s, more like 25. If you're in your 50s, more like 20, okay? You do the maths. On this sort of average of 2.8% interest rate, we'll be looking at 1,800 euros per month in mortgage repayments. And of course, there are other costs associated with the property, but just for this example, I'm going to exclude property management costs and running costs of the property. So just to show you guys what the return on investment is with mortgage versus cash purchase without counting the cost, just for easy comparison, but obviously the percentually it will be the same. So, in very simple terms, with a mortgage of 70%, which is what a Spanish bank will give you guys buying property in Spain as non-residents, that means the bank will be lending you around 350,000 euros on those terms, which are around 20,000 euros a year in repayment terms. That means that you are going to have to make a down payment of around 30% of the purchase price, which is around 150,000 euros. And the banks in Spain, at least here in Spain, they don't finance purchase costs or closing costs. So you'll have to make sure that you also pay upfront the purchase cost of the transaction, which means that all in all, your down payment is 200,000 euros. That's your cash. That's what's going to be coming out of your pocket. Now, why does that make a difference? This is the money that comes out of your bank, and this is the big difference. So let's talk about a cash purchase. On a cash purchase, 550,000 euros and 48,000 euros a year rental income, you're around 8.7% return on investment. But look what happens when we apply the beautiful good debt of mortgage or leverage finance. If we leverage with the Spanish bank and they give us a 350,000 euro mortgage and our cash investment's 200,000 euros, we can't really say that we're investing the full 550,000 euros. So we talk about cash on cash return. The cash you're sort of investing is only 200,000, and that's what we're going to be weighing up the return on. So on a 200,000 euro down payment, you're going to be making 48,000 euros a year rental income. After paying your 20,000 euros a year mortgage, you're left with around 28,000 euros of free cash flow. And again, in both scenarios, I've excluded the running cost. But at the end of the day, these numbers might be lower, but in both cases, they'll be exactly the same in percentage terms. So if you look at that, that means that we have a 14.3% return on investment, which is hugely or a lot better than a 8% investment on your invested cash. So you invest 200,000 euros in cash, and you're going to be getting a return of 14.3% year on year, cash on cash. But it gets even better, because by buying a property with a mortgage, every single year, you're also going to be building up your equity in the property, which looks like this. So on average, let's say that you're going to be gaining around 10K a year in equity built up in the property, which actually pushes your return on investment closer to 20%. So there you have it, guys. That's the biggest difference between buying a property with your own cash or fully financed by yourself, or using the bank and using the leverage of Spanish banks or European banks. In today's day, in today's sort of inflationary economy where inflation is rampaging through Europe, it's never made more sense to buy investment properties with the bank. Leverage your cash properly, and this is a sort of fail-proof way of investing property in Spain in 2025. In both long-term rentals or short-term rentals, that's really our breakdown. So I hope you guys found this video useful. It's the first video we're doing of this type. So please leave in comments any questions you might have, anything you think I've missed. And of course, if you like this video, please give it a thumbs up so we know we're creating the right content for you guys. And if you're new to this space, press the button, subscribe to the High Homes YouTube channel, and we'll keep you guys updated and posted with the best of Spanish real estate investment, and much, much more. Guys, until the next time, hasta luego.